now world business news. Eurozone finance ministers have approved the €78 billion emergency loan program for Portugal at a meeting in Brussels and opened up to the idea of reprofiling Greek debt. The finance ministers for the first time floated the idea of talks with bondholders over extending Greece's debt repayment schedule. Europe would consider reprofiling Greek bond maturities as part of a package including more sales of state assets and deeper spending cuts. This marks a break in Europe's strategy as governments will potentially shift some costs to bondholders, instead relying on taxpayer-funded bailouts to stamp out the debt crisis. Nasdaq OMX and Intercontinental Exchange dropped their $11.3 billion bid for the operator of the New York Stock Exchange after U.S. regulators threatened to block the deal. Antitrust authorities made it clear they would not give their approval. Analysts say this now paves the way for Deutsche Börse to take over the 219-year-old NYSE. Meanwhile, the London Stock Exchange is facing a rival bid for the Toronto Stock Exchange. A group of Canadian banks and pension funds have put a $3.7 billion offer on the table for TMX Group, topping the LSE's $3 billion offer. The London Stock Exchange says, however, that it remains committed to a tie-up with Canada's largest stock exchange despite the news. Internet search engine Google entered into the U.S. bond market on Monday with a $3 billion sale of 3-, 5-, and 10-year notes. Google is the latest to tap the corporate bond market this year, as many companies look to take advantage of low interest rates. The proceeds of the issuance will be used to repay commercial paper and for general corporate purposes, the company said in a statement. The deal earned an AA2 rating from rating agency Moody's, the third highest valuation on its scale. Google is one of the few blue-chip technology companies to have debt on its balance sheet, only about $2 billion. That's a tiny sum compared to its $169 billion market cap. India's inflation dipped slightly in April, but upward revisions to past readings and the prospect of higher energy prices will keep pressure on the central bank to raise interest rates in June and maintain its hawkish stance. Government data released on Monday showed a minor dip in headline inflation to 8.7% in April. However, the government revised upwards the March figure to 9% and February's to 9.5%. Economists warn prices could quicken again in the coming months, mainly due to Sunday's petrol price hike by India's state-owned oil firms. Therefore, experts say it is vital for the Reserve Bank of India to raise rates further to bring down inflation and maintain high growth. Before we head back to news, let's take a quick look at the Asian equity, the commodities and currency markets, and after that, Laura Buckwell is back with the news.